Thank you very much. Welcome to the Halftime Report. I'm Scott Wapner. Front and center this hour, the Fed chair under attack, what it means to this record-setting rally. We will, of course, discuss all of this with the Investment Committee. And joining me for the hour today, Joe Terranova, Amy Raskin, Steve Weiss, and Bryn Talkington. We will go right to the markets, give you a look at how we look on Wall Street, 12 noon in the East. And we'll turn around a bit. Obviously, Joe, we opened negative, probably related to this DOJ probe of the Fed chair, and we'll get into all of that in a minute. But the markets come back a bit, and we are positive in almost all areas, but the Dow. You know, we've been at record highs.
We have.
You want to tell me how you're thinking about this news as it relates to the market, which right now just appears to be attempting to look past it?
I think it was a derivative trade last evening. If you were trading futures, you went short the NASDAQ, but you had to cover them by the time this morning opened, because that's when the real vital signs of the market, you were able to check in on them. The bond market has remained calm. Overseas markets have remained calm. We're seeing again this morning that the buying is showing up in the Russell, which is approaching another all-time high. Semi-equipment names, whether it's Lam Research, Applied Material, KLA Corp, they are approaching new 52-week highs. So I don't see anything within the market that is reversing what has been the trend early so far in 2026, and really the trend coming into 2026 from the fourth quarter of 25.
Amy, you know, the street's weighing in on the events of last evening. Raymond James says we do not anticipate a prolonged market impact. Wolf agrees it's not clear this really changes the picture. TD Cowen suggests that this probe could hurt housing and slow bank deregulation, but the market seems to be voting with those first comments that I made, that this doesn't really do much to change the picture. How do you see it?
Kind of like everything else, hasn't done anything to change the picture. Venezuela, you know, we keep getting these headlines about political actions, and, you know, people are weighing in. But for the most part, the market has been just looking through them. And I think that continues, because who knows what's really going to happen? Is anything going to come of this? I doubt it, honestly, so I think that's where the market's going.
Weiss, how do you think about it?
I think about this way, that the market has looked at all these points that have come up, the geopolitical risks that we keep seeing, the U.S. being much more aggressive, and looking at them individually and discounting them individually. So I question, when's the time going to come that they're going to look at them as a whole and say, hey, we've potentially got some problems here. Now, in terms of Powell specifically, he's going to fight, and he should, and he's going to stay there till his term expires in May. However, what it does at that point forward is perhaps troubling. Now, this is a market that's waiting until the event actually happens. It's unwilling to take a stand on negative events, and it's very optimistic on all events. To me, that's a cautionary sign. That's not a positive sign.
I mean, there's a belief, obviously, in the market. You hear it from executives privately. You see it from the stock performance that the so-called good pushing stocks higher just outweighs any of this type of stuff, whether it's, you know, telling defense companies you can't buy back shares, or telling private industry you can't own houses, or, you know, this thing with the Fed chair, or a number of other things that have happened. The good that's out there, the deregulation, the animal spirits stuff, the effects of the big beautiful bill filtering through, what's going to happen with corporate earnings, is just far more powerful than any of this other stuff, how troubling to some it may be.
For today, that's correct, but it goes back. They're basically, the bears are coming to a gunfight with a knife, right? And they're looking at each individual thing, saying, we can get by that. This thing with Powell, that's never going to happen. The Fed's always going to be independent. So right now, it's a glass half full market. I'm not saying that's going to change anytime soon, but it's a glass half full, and I don't think it's that. I think it's maybe even half full, half empty.
Well, I mean, Bryn, you look at the market activity since the start of the year. It's clearly a vote that it is a glass half full, or the market wouldn't look like it does. And the broadness that we've seen wouldn't look like it does either if the market didn't fully believe that.
Yeah, absolutely. I mean, I think that, you know, you see it mostly acutely in small caps, as Joe had mentioned. And as we have a continued steepening of a yield curve, maybe we get a 5 handle on GDP next year. The consumer in aggregate is fine, whether the makeup isn't so fine, but the consumer in aggregate is fine. And then earnings are going to be, what, 12 to 14% are the estimates, really across that. So I think, the majority of those earnings estimates, once again, are coming from tech. But I think this catch-up trade, has legs. We have RSP, which has done well this year. And I think that what's been so important is, like, this morning, the NASDAQ was down in the futures almost 1%, 80 basis points, and now it's up about 30 basis points. It shows you the strength of the market to be able to shrug off this. I mean, if you think about it, not just Venezuela, clearly, Powell and the DOJ is disturbing and probably a big waste of taxpayer dollars, but also you have Iran, and that is clearly boiling up, and that the market continues globally to go higher tells you that people are looking past these real events. They're not just headlines. These are real events that are occurring, that we've been able to be very strong, not only in tech, but to your point, much more broader, not only in the U.S., but overseas as well.
Not to mention, Joe, Fed independence has always been viewed as so sacrosanct that, some would suggest that this fully makes the ship has sailed on that issue.
Okay.
But the other side of that, too, is that the market expects rate cuts. And, whether this impacts that in any significant way, some are suggesting that it actually hurts the cause of the administration if they want rate cuts. Others would say, well, you're going to get rate cuts nonetheless, which is another reason why the S&P looks the way it does, rather than falling off of a cliff on this news and notion that what has been so sacrosanct for so many decades is fully gone.
I last sat with you on Wednesday. Since Wednesday, monetary policy has gotten easier. Why? Because the president went out and announced, Fannie and Freddie, I want you to go buy $200 billion worth of mortgage bonds. That's unprecedented. That's monetary policy getting easier. I think you have to look at all of this collectively, and Steve makes some really good points on a reckoning moment at some point in the future. But when you're managing the portfolio, you're always saying to yourself, where does the risk kind of fall apart? And Scott, right now you have the ability, with very low volatility, you have the ability to hedge. The hedge really right now is in the precious metals market. If you're troubled about all of this, you're out there, you're buying gold, you're buying silver, which is up another 8% today. And guess what? You're able to hedge and get paid on it. So you're comfortable sitting in your portfolio positioning, awaiting what Steve anticipates at some point in the who knows future, the reckoning moment.
Well, why does Steve buy, wasn't it the GLD the other day?
Yeah.
I mean, hello, why do you think gold is up the way it is? Why has it continued to go up?
Look at it today.
Why is, let's put it back up, why do some say, you're heading towards, I don't know, 5,000?
I think
because
you're right.
of events like this that are deemed to be destabilizing, pushing the precious metal of gold in that direction.
Yeah, look, I think there is protection being taken out. I also think gold is because some of the people that were hanging on to the dream of Bitcoin and others being inflation hedges or stores of value have seen the lie put to that narrative. So you've had those go into gold as well. Look, as I said, right now it's steady as she goes. But at some point, I do believe that there will be reckoning. And it's interesting. Amy and I were talking about this before the show. If people haven't read 1929, I'm only a third of the way through it. But I'll tell you, there are definitely similarities between them, which was a highly speculative investing environment that led to the crash.
Right.
And we're seeing that kind of speculation.
Let's go to Eamon Javers. He's at the White House with the very latest. By now, we all know, of course, about the probe. We've seen this unprecedented response from the Fed chair on video last night. What is the latest as you stand on the North Lawn, Eamon?
Well, Scott, what we saw this morning is a powerful group of former Federal Reserve chairs and Treasury secretaries, including Alan Greenspan, Ben Bernanke, Janet Yellen, and Robert Rubin. They all released a striking joint statement this morning in defense of Federal Reserve independence and in opposition to the Department of Justice's criminal investigation of current chair Jay Powell. In it, they write, "This is how monetary policy is made in emerging markets with weak institutions, with highly negative consequences for inflation and the functioning of their economies more broadly. It has no place in the United States, whose greatest strength is the rule of law, which is at the foundation of our economic success." And a source familiar with the DOJ investigation confirmed to CNBC last night that it is being run out of the U.S. Attorney's Office for the District of Columbia, which is run by U.S. Attorney Jeanine Pirro, a longtime political ally of President Trump. Now, the president, for his part, told NBC News yesterday that he doesn't know anything about this DOJ investigation, Scott. So that's where we stand as of this morning. I've asked the White House for a reaction to that statement from the former chairs. We haven't got a response from the White House just yet.
He may claim to know nothing about it, but Eamon, what we've seen is that he expects this Department of Justice to operate in many different ways than traditionally it has in other administrations. Is that fair?
Yeah, I mean, you talk about Fed independence, DOJ independence has been a long-standing sort of rule of thumb or norm in Washington. The president does not operate that way. We've seen him give orders to Pam Bondi, the Attorney General, over social media in the past. This president expects the DOJ to do what he wants it to do. And in this case, the president says he's not familiar with this investigation, but certainly a lot of his political allies are, right? FHFA head Bill Pulte pushing for this argument as far back as last summer that Jay Powell had lied in his testimony up on Capitol Hill. Lying to Congress, of course, is a crime punishable by up to 5 years in prison if you're tried and convicted. And we see Jeanine Pirro now leading this investigation inside the Department of Justice. These are people very close to the president who are making the case or carrying out the investigation that something deeply untoward happened here. And overall, you're looking at an effort that would end up putting the Fed chair in jail if it's successful.
All right, Eamon, you'll keep us up on any other headlines that move. I know you will throughout this day. Thank you very much. It's Eamon Javers on the North Lawn. There is news, too, to report that according to a report, the president will interview BlackRock's Rick Rieder for the position of Fed chair this coming Thursday. So remember, he was part of that so-called now Final Four. And Rick Rieder is going to be on Closing Bell with me this afternoon, to which we will discuss that and everything else about these markets and the Fed and what he thinks about what is happening related to that institution. We should also get to this idea of what I believe I mentioned, the credit card cap, right? Trying to cap interest rates for a year at 10%, something to which the president said the companies that don't do that will, quote, be in violation of the law if they don't. There's no law to be in violation of. Should mention that. The credit card names are all down, however, as you see. American Express being on this list, the worst of those performers, down 4.5%. The target today, though, was raised to 425 from 390. You own Amex. There's ownership here of MasterCard, Visa, and Amex. You own both of those. You own Visa. What do we make of this?
Well, Synchrony Financial is the one that's really troubling for us. It's a position in the JOTI ETF, and that's down about 8% today. What I think about this as we look towards where the direction of this conversation is going to go, I think it's a warranted conversation for consumers. We need to have an educational process on the usage of credit and when you're utilizing credit at 20%. The other side of that is credit availability. If you cap it at 10%, we all understand is going to be troubling. I think where the outcome on this actually lands, the president has said there's a January 20th deadline. I think you're going to hear that January 20th deadline will be extended 3 to 6 months while the executives in the financial services industry work with the president on some type of reform. So when I look at American Express, I look at Visa, I look at MasterCard, I look at Synchrony Financial, the positions that we're holding, I'm not highly motivated to say right now, okay, we need to neutralize those positions. I'd rather hear what happens with earnings in the next 10 days.
What do you think?
Yeah, I mean, this raises a conversation that wasn't raised before. So do you think it causes some confusion and you know, people will look at the rates again and say, look at how high they are and ask questions. The networks actually don't have lending exposure, so Visa and MasterCard are less exposed than an Amex or a Synchrony or some of the other ones that are actually extending the credit. That said, this is all governed by state law, so I'm not sure that this could actually be put into place. So, but it does raise the stakes. And I would just say, though, also just back to our conversation about the markets in general, we're at 69.70. We were at 69.50 last October. So we are making new highs and we are sort of moving up, but it hasn't been a rip-roaring market really for the last few months. And I think that does say something, especially when you have GDP growing really nicely and productivity very strong. So just something to think about. I
think I was, a little bit surprised, Bryn, to hear the other day when Rich Saperstein was on with me on Closing Bell that, he is factoring in this, if you want to use the word interference or whatever, from the administration in corporate affairs, and how he's thinking about investing in certain types of stocks and certain sectors. I always ask you about energy. I'll bring that up too. It's this threat of punishing Exxon because Darren Woods said Venezuela was uninvestable during this meeting in the White House on Friday. This public meeting to which the president said, quote, "I didn't like Exxon's response. We have so many that want it. I'd probably be inclined to keep Exxon out." This is what the president said aboard Air Force One on Sunday. They're playing too cute. So, you threaten to keep them from doing business because they don't agree with whatever strategy you would like them to do. And I really want to know, as either money managers, strategists, or whatever, how much you're thinking about these types of issues when you're picking stocks. And what I've been told from all of you is a stock picker's market this year.
I think that's a really fair assessment that he made. Look at Intel. And you could say that the Intel news is actually positive, because why should we just give these companies money and not get anything in return? So I think you have to think those through. Absolutely. We had this with Biden and Tesla, right? Tesla wasn't even invited and just kicked out of the meeting. I think this is a much more amplified version of that. Obviously, President Trump tells us what he's feeling and how he's thinking. We get play-by-plays on, Truth Social. And so I do think in certain areas, and we saw this with the tariffs, right? I played Restoration Hardware when they announced the tariffs because I thought it had been overdone. And so I think you can look at it both ways. I think that when the Supreme Court comes out with their ruling on IEEPA, if they roll back some of those tariffs, which it seems the probability markets would say you will, you can actually profit off that if those companies like a Restoration Hardware and On or a Nike, which constantly talk about those tariffs, if that goes away. So I think there's both sides from a long and a short side, or just to stay away side, that you can think of as you're investing in these individual names. But you cannot ignore that. That would be remiss to completely ignore what the President of the United States is saying.
Yeah. Hey, by the way, JP Morgan reports tomorrow. You're 18 minutes in the show. You don't even get to the news, the big news of the week, because you're dealing with all these other noisy issues that the market's trying to assess whether this thing matters, whether this thing's going to happen, or whether this isn't, and then how the market may react to it. You're in JP Morgan. The large banks, for the most part, have had a pretty good start to the year. Not so much JPM like the others have. This stock's only up 0.5% year to date. Goldman's up 6.5%, and that's the one we focused on a lot for the obvious reasons. But how should we be thinking about bank earnings in what is the beginning of what is expected to be a very strong earnings season, which is one of the principal reasons why investors are as bullish as they are?
High expectations in the money center banks, for sure. Trading revenue to be very strong once again, as it was in last quarter. The assessment on where we are in terms of the consumer and the economy, I think, is going to be important as well. But I think there really needs to be something particularly negative universally across the board for the money center banks for me to look at the banks and say, okay, it's time for me to reconsider my positioning there. I think the positioning that I have in the banks is the right positioning, and I would expect I'll carry that positioning through most of 2026.
Maybe you can make the argument, Steve, that this is more of an Alphabet story than an Apple story. It just continues to lend credibility to Gemini 3 and what this company has managed to do for a stock chart that looks like that. By the way, you already had Alphabet topping Apple in terms of market cap last week.
Yep.
Whether this pushes it above $4 trillion, I believe it did. Do we have that? Can we get the up-to-date on that for me, please? Just so we can see it. While I mentioned it, everybody on the desk owns Alphabet, so it's relevant to that conversation.
Yeah, and so Alphabet and Apple have had a pre-existing relationship, but Apple could have gone anywhere they wanted to power Siri.
Just briefly pushed it over 4, but it's right there on the doorstep.
And they chose to go with Alphabet. So I'm actually surprised in this kind of market, momentum market, Alphabet's not up more. I'm also surprised
it's been up a lot.
Right, no, I mean on this news, it's had a great run. And I'm surprised that Apple's not up more because it seems like they've finally come to grips with their AI strategy and said, we're really going to outsource it. So I think the partnership may actually be deeper than what they announced.
Well, because as Kovacs said, right, we need the details.
Right.
We need the financial details.
Absolutely. And Apple, though, has come down quite a bit from the highs. So that's why I'm surprised, in particular, that it's not up more in this.
Let's do this. Let's take a quick break. We're going to come back. Bill Baruch is going to join us because he has a number of moves, new ones, that we want to document for you. We'll do that next. All right, welcome back. I told you Bill Baruch's been making a number of moves, which is why he joins us now on the telephone. Thank you for joining us again. I'm going to start with this trimming more small cap ETF, the IJR, which you made the point last week when you first told us about the move that it had underperformed the IWM, right? Small caps had done great. IWM had better reflected that than the IJR, so you were lightening up your position there, and now you're doing it more. Just give us more information on that.
Yes, we leaned into IJR, and I think the small caps have had that risk-on thrust, but the IJR underperformed. So we were very overweight. We're trimming this back to get back in weight for where our model traditionally is. So the other thing that really stood out Friday is the jobs report was not as bad as feared, and we're starting to see, some idea here that's pushing back the rate cuts. And if we're not going to get the rate cuts front-loaded in the first half of the year, then small caps case is quite a bit weaker than it was, say, a month ago.
I mean, are you painting this as more portfolio management or fundamental changes that make the story not as good as it was? Because it sounds like I'm hearing a little bit of both.
I think this is definitely more portfolio management. I think the small caps still have a case, but I think the money is better allocated elsewhere rather than being overweight small caps right here, right now.
Like where then?
So we bought IYM, and talk about a big, beautiful breakout. This is the materials ETF, and I like what we're seeing here. Now, on the show last week as well, I talked about rebalancing our gold miners as well as our CEF, the gold and silver physical ETF. And there are miners in this ETF, but you also have other things in the materials space. You have chemicals, you have Freeport-McMoRan is also a top holding in there. So this chart looks absolutely phenomenal right now. So we're dipping our toes in here. We got about a 75 basis point allocation, and I want to increase. I want to be surprised to see a little bit of a back test of this breakout, and I want to continue to lean into this. I think this is going to be a great story for 2026.
Okay, you bought Tesla. Tell us about that one.
Yes. So we did sell Tesla November 21st. I'll call myself out. It maybe wasn't the most opportune time to sell Tesla, but we put the cash elsewhere like Micron and things like that. Now, what Tesla's done since I exited, it went basically straight up. And it shows this is one of the greatest momentum stocks there are, and there is some momentum behind it. Now, it pulled back last week after the CES conference when NVIDIA unveiled their open source autonomous platform. And now Tesla, I think, has a knee-jerk reaction down, and it tested a great level of support, a trend line going back about a half a year to those lows. And what I really, really like here is I think we're in a risk-on environment. I think you need to own names that are going to help stoke this breakout in the S&P 500, and I think Tesla looks phenomenal for doing that right now.
You just made a mistake selling it when you did. That's the bottom line.
I did. I called myself out about it, but I had reasons to believe. We repurposed the capital in things like Micron that are up 50, 60%, since buying it. So I'll take it.
Okay, that's fair. You sold McDonald's and you sold Workday. So we have a lot of conversation on this desk about software, obviously, but give me the McDonald's one first. Why are you selling that?
I like the name. I like the franchise model. I just think right now is not the time to own it in the portfolio. And I was trying to get cash from somewhere to buy Tesla. It was towards the bottom of our portfolio in a different environment, maybe towards the middle of the year. I see me owning this again. I like the name, but you know what? It had an attempted to break out and it failed. It's sort of very lukewarm chart. As for Workday, software's done fairly decent, and I thought maybe we saw some tax loss harvesting in December for software. See a bounce back. Even the mid caps and the small cap software names have done all right. But Workday has not done what we've expected. It's actually really, really on the lows of over the past year and a half. And I'm fearful that it's going to break new lows. But also, again, the capital is better put somewhere else. And that's what we use to buy Tesla.
All right. Bill, thank you. Appreciate that very much. That's Bill Baruch joining us to document the trades. I mean, it's a challenge with software, man.
Software looks pretty lousy right now. Workday, him selling out of it near a 52-week low is clearly understandable.
Yeah.
Microsoft can't catch a bid. I mean, it's just dead.
I mean, you have some select calls in the group that continue to like the snowflakes and names like that. But I just can't get out of my head what Brad Gerstner told us, a week or so ago. He looks at the list of the names that are down a lot, and he said 90% of the ones that are down deserve to be down. That's a shocking statement when you look at the declines in some very popular names, and maybe, at least in that investor's mind, they deserve to be there.
The one that's interesting today, it's up 2.5%, is Oracle, trying to make a little bit of move above $200. Follow that one.
All right, so we'll take a break. All right, we'll do calls of the day. Let's talk about Albemarle. Got upgraded today at Scotiabank. Bryn, you own the stock. Well, the analysts had an 85 on it as the price target, and they raised it today to 200. The only problem with that, of course, is that the stock is at 167 and 168 now. Okay. What do you do with that?
Well, I mean, he's a little late to that party. So
you think, Bryn?
This goes into the camp of narrative.
Bryn, there's nothing left in the
price.
punch bowl. All right, the party's so over. It's like people are sleeping on the couch. It's,
Okay,
I'm not saying the stock can't go up, but if you're late to the party, you know what I mean.
Yeah. So I've owned this for a long time. We've talked about it a couple of years ago. I'm still down on the position. And so just for commodity investors, understand these are very cyclical and it's always different. And there's always these long-term macro viewpoints. But I think that I would not be putting a new position on this. I'm still in it. We'll see where it goes. But I think that the lithium market was in a huge glut. We have a supply-demand more balanced right here. So sure, it could go to 200, but I don't think you're going to get another 70+% year. And just remember the cyclicality of some of these like lithium are just incredibly volatile.
Yeah, I mean, there's the move, obviously, from October 1st until today. So it's a catch-up move, quite obviously. Newmont, the target to 123 and 90 cents, not 124, not 124, 123.90, and that's at Goldman Sachs.
For the record, I modeled it at 124.92.
Well, it was at 99.90, not 100 either. So, we'd like to be precise at Goldman Sachs. 123.90.
Value of the U.S. dollar continues to move lower. I think we're in agreement, given the news that we've heard overnight. That only adds to the significant downtrend. I think it's about the commodity trade. I think it's about Newmont. I think it's about the SLV, which is the silver ETF. Silver really making a parabolic move. It's about Bryn's Albemarle. It's about going other places like maybe Bunge, ticker symbol BG, Freeport-McMoRan. That's at a one-year high today.
That target got raised to 67 from 48 at Citi. Reiterated
it did.
buy.
from 48 to 67. Well, that probably needs to go up a little bit more because I think 2026.
That's a reasonable call, right?
That's a reasonable call, but I would actually say
it's going to 67.
And I actually think that's actually going to need to be raised into the upper 70s, close to 80, because I think 2026 is going to be a year about commodities and a year about a lot of these commodity names.
Do you think we should ask Bryn what she thinks about this call?
Absolutely. I think she's going to agree with me.
Are you trying to steal all the
she's going to
thunder?
agree with me.
Joe tried to take it, but Bryn, we're going to give it to you since you own it.
Yep, you know what? I've been in the stock for a few years, and I've been very successful at selling calls at 45 strike price because the stock could not get above that. It is clearly broken out. So as of the middle of February, I'm quite sure this will be called away. I do think, though, copper has so many use cases, and after this long-term base of not being able to break out above 45, very long-term base, I think that, you know, maybe we get some digestion, but I think this probably goes higher. All
right. Natera reiterated by 285 Canaccord Genuity. Amy, you own the stock.
Yep. It's been a great stock. It was $70 2 years ago. It's now $230. So it absolutely owns the diagnostic MRD space. It pre-announced this morning, revenue up 40% year over year. Great long-term play, cash flow positive. A lot of good news is baked in, but I still think it works from here.
Okay. Bryn Talkington, your final trade is what?
Capital One. I think it's overdone, low probability anything gets done. Richard Fairbank, founder, CEO, complete rock star, 50 and 30% revenue and earning growth this month when they report earnings.
Okay, thank you very much for that. Stephen Weiss.
United Health is down on news coming out of the Senate. They were aggressively in charging. It's old news, and I think it's an opportunity to buy it.
Okay, Ames?
Regeneron also down on JP Morgan news, but I like it long term, and it's in the middle of a nice recovery.
Oh, gee, Joe, I wonder why you're picking Alibaba. It's up 10%.
It's up 10%. You figured that out. Up 10%. Use a 148 stop on it.
All right, I'll see you on the bell.
Hello, everybody. Welcome to Blue Cloud Trading. I'm George. We just saw some clips from today's episode of the Halftime Report. Today, it's Monday, January 12th. It's currently 1:56 p.m. as I'm recording this video, so the market is still live, but all indices are currently up. You can see here the Dow's up 0.05, NASDAQ is up 0.4, the S&P 500 is up 0.16, and the Russell 2000 is up 0.44%. What's going on today in the markets? NVIDIA, Palantir, and Intel, they surge with Intel up 11% after Trump praise driving tech outperformance. What else happened today? S&P 500 and Russell 2000 gain, while the Dow underperforms amid sector rotation. The financials, including Amex, Capital One, Citi, JP Morgan, Visa, Synchrony, dropped sharply on Department of Justice criminal probe of the Fed Chair Powell and proposed credit card rate caps. You may have heard about that, 10%. Fed independence concerns rise, fueling volatility ahead of the next CPIs and bank earnings. Walmart climbs on NASDAQ 100 inclusion and Google Gemini partnership. What else? Alphabet highlights a $4 trillion AI investment push, boosting sentiment in AI-related names. Eli Lilly and NVIDIA announced a $1 billion AI drug discovery lab collaboration. Alibaba, and gold miners rally as gold and silver hit fresh records above 4,600 on a weaker dollar and higher yields. And no major economic data releases, with traders bracing for heightened volatility around Fed autonomy and the media merger and acquisition activity, including Paramount's $30 per share hostile bid for the Warner Brothers discovery. All right, let's take a look at the heat map. Let's see how the individual stocks are performing here. You can see the financials got hit pretty hard, down the most. Okay, some of the healthcare stocks and medical devices, diagnostics didn't do so well. Eli Lilly and Johnson & Johnson, only those two stocks are up. NVIDIA is up 1.05, Broadcom is up 1.92, AMD is up 2.62, Oracle is up 3.2. Walmart and Costco are up, Google, Amazon, Tesla. So there you have it. As far as the groups are concerned, the strongest ones today were basic materials, up 2%, a little over 2%, consumer defensive technology, consumer cyclical, and industrials. Financials, healthcare, utilities were all down. All right, here's the best part of the video. This is where we go into the analysis of the stocks and ETFs that they talked about on the show. There's actually, I already previewed these to give you guys the strongest, the ones with a little blue flag here, are the strongest stocks and ETFs that they talked about on the show. And we're going to also take a look at the index ETFs like the SPY, the Qs, the Dow, the Russell 2000. We'll also take a look at some of the Mag 7s like Tesla, Apple, Meta, Microsoft, and Amazon. And we will also take a look at GLSI, one of our members' requests. So let's go ahead and get started with the SPY first, and then we'll go through the rest of those in a few moments. So here's the S&P 500. Here it is in the daily chart, still above that 691.66 level. Actually, this morning, what's interesting is price actually gapped down in the morning. You can see that drop right there, and then it started to get bought up. So if we can see all that in the 5-minute chart, there's the gap down that happened here on the 12th. Okay, this is the closing price from Friday, 4 p.m., and then this is what happened this morning. And then of course price came down to, actually it came down all the way down to this level. The dotted green line is the opening price, and then it just started getting bought up, which is great. And then since that point, as you can see here, we're up. We're currently now, we opened here, we got above Friday's closing price, which is that dotted red line there, and we're staying above it. We're up 0.16%. The QQQ ETF, up 0.17%. Let's look at the daily chart, still looking pretty strong. We are close to that 637.01 level. We're about, let's see, how far are we? We're like 1.4% away from the all-time highs for the Qs. So we'll see if we can reach that level. The Dow Jones is up 0.04%. You can see it's still changing, of course. It's currently 202, right? So 2 p.m. And it's looking more positive than negative here, but we are stuck inside this consolidation here. You can see that. By the way, if you guys are unfamiliar with what we're looking at here, it's called the Ichimoku indicator. Here's a weekly chart. I'm going to just show you real quickly for those of you who are new. What we have here is the price, the Japanese candlesticks that represent the price, 495.25. If it's a blue candle, that means it's a week that's up. If it's a red candle, that week price dropped. So price has to be above the 9 period. So it takes the midpoint of the last 9 periods or 9 weeks and plots it right there. That's the midpoint. And then the red line is the Kijinsen. So this is called Tenkan-sen. This is called Kijinsen. The red line is the midpoint of the last 26 periods. We've got Senkou Span A, which is derived by taking the midpoint of these two moving averages, projecting it 26 periods into the future. So that's part of the cloud, the Ichimoku cloud. And then you have the Senkou Span B, which is actually the midpoint of the last 52 periods or 52 weeks. Instead of plotting it under the candle, it's plotted 26 periods into the future. Okay. And then we've got the current price right there in a line form, projected 26 periods into the past. And the reason it's there is to see where it is in relation to the candles 26 periods ago. So if we are above it, as we are here, that's very bullish. If we are under, it's negative. So we want the green line above the red line. We want price above both moving averages. We want price above the cloud. That's when you know that you have a nice bullish uptrend, which you can see here for multiple weeks now. We've been in a nice strong uptrend. When things start breaking down, when price gets under the moving averages, it can be short-lived, but sometimes it can also be a much further decline, like back in 2008. For those of you who are, trading buffs, I'm sure you guys remember the 2008 financial crisis, for example. Right here, we could see that the price had dropped significantly over that year. Price, it all starts with price getting under the moving averages, entering the cloud, and you can see that big drop right there of over 49% from that point. But from the highs, it was actually a much bigger drop, about 51% in just 1.4 years. And it took a while. It took many years to actually, multiple years to get back to those highs, right? And but the Ichimoku could have, Ichimoku is just more of a guide, and it has it's rules based. So if you have a difficulty with trading and picking the right optimal time for entry, this can give you some insights. And there are multiple strategies with Ichimoku that I teach. Anyway, Consider also becoming a member, guys, if you're interested. To do that, you just come to my channel, Blue Cloud Trading, and you select, okay, under Blue Cloud Trading here, you just click on the join button, right? You'll find that next to subscribe right there. If you hit that join button, it's free to subscribe, and hit that notification bell also if you want to get notices of these videos. But if you want to get access to the members only videos that I do each weekend, like this one here, which is a 57-minute video that I did over the weekend where I go over my entire portfolio, and I basically provided about 30 new stock ideas for the week, and I actually added a number of those, 5 of those 30 options to the portfolio. I also share the proprietary scan results that pop up using the Ichimoku. So if you want to get access to that video, you do need to join. So you click on the join button here, and you would need to select Blue Cloud Trader. That's the second level in the membership. And then you can get access to those exclusive member-only videos. And you get them, 4 of those videos per month. If you want to get access to the daily trade updates, become a Blue Cloud Legend level. So select that level right there. You'll get access to the daily stock and ETF trades that I do. And you'll also get access to that members only strategy video plus day trading videos. And you can request up to 3 stocks or ETFs to be analyzed each month on an upcoming video. All right, so let's get into the rest of these ETFs and the stocks, of course. So Russell 2000, let's look at that one on the daily chart. You can see it's very strong. We recently broke above that 258.20 level, that prior high, and we're staying above it comfortably. So I like what I'm seeing with the Russell, obviously, up 0.42%. How about the FEZ, which is the Euro Stocks 50? And it's comprised of mostly European stocks. And what you'll notice is price got above that $66 level, which was actually a monthly resistance level. So if I switch over here to a monthly chart, these Japanese candlesticks all of a sudden become monthly candles. And the last time, you can see the years down below, right? The last time we were at $66 was actually back here in 2007, okay? So 2007. And we're breaking through those highs from 2007. So that's pretty huge. That's a big indicator that I'm just guessing here that we're going to see a continuation to the upside since we broke those resistance levels and we didn't get stuck, okay? Here's a daily chart. Look at it gapping up 0.6%. You get the VIX actually spiked a little bit, 4.14%. It gapped up, but then it started to drop, which is good. We want the volatility to be low. We want this to be actually declining, not going up. And if you look at the 5-minute chart, you can see how it gapped up in the morning. Of course, that's what led to the market dropping. So it's the inverse reaction, right? And then what happened? It started to decline throughout the day, and the market has been moving up as a result. Opposite reaction, okay? So let's look at the stocks and ETFs they talked about on the show. Let's see if they are technically sound, right? Not just fundamentally. And let's start off with, I've actually put the strongest ones at the top with a blue flag and then the rest of them at the bottom. So let's start off with ALB, which is Albemarle Corporation. It's in the basic materials sector, which is a strong sector, obviously. You can see here that price was in consolidation area right there, and it popped today up 4.85%. I like ALB, looks good. In order, by the way, for it to get a blue flag, it needs to look positive and have bullish technicals, not just on the daily time frame, but also on the weekly. And there's the weekly chart. You can see it's above the 200-day, moving up. You can see the bearishness that occurs when price gets under the cloud here, right? So if you go back to this level here where it got under the cloud back in March of 2023, and let's go ahead and measure that with our measuring tool here. It dropped to these lows over a span of 2.1 years. It dropped 78.04%. So what's the advantage of using Ichimoku? Well, it will keep you out of a stock that's in decline because it's really difficult to identify exactly when to get in until price starts to show some strength. All right. And so you can see here, it started to break, it started to stall and started to move up. And then when it finally broke through the cloud itself, you can see it now even more jumping through. And not only that, it's also taking out, prior highs, like those highs right there. That little ascending triangle pattern led to that nice move up. It also took out this high. It took out this high, took out these highs. So ALB is off to the races right now. It looks pretty good on the weekly chart. These are weekly candles you're looking at here. This can be a much more sustained move up. And so if we measure from these lows here, prices already moved up 234%, because it got down to a price of $50.50 from prior highs up here of $336. That's the high back in 2022. So you're still, getting in at a relatively good price. The price of sales is 1.93. That's the price of sales ratio. The price to earnings growth is pretty good at 2.3. It's not like perfect, but it's not bad. Sales growth is 13.85% over the last 5 years. And this is it has a capitalization of $19 billion company. Now the profit margins are negative 0.43%, but one of the things that you can do to identify this, are things actually improving with profit margins? And I haven't checked it, but I can do a quick little check right now. Actually, let's do that on this specific stock. So it's ALB, because I haven't really ever analyzed this one here on the show. So let's take a look at it. ALB, we're using FinViz Elite here. Okay, there's the chart. Here are some of see these little green boxes down here. These represent the earnings announcements that they had back in April. Okay, the revenue, there was a negative surprise of 7.48. So the price didn't really move much. Here, there was a positive revenue surprise of 8.78%, and you can see how it led to that move up. Here was the last earnings announcement back on November 5th, and we had another positive revenue surprise of 2.4%, which led to a continued move up. Now, where does this stock, what does the stock look like currently? The sales look like they've dropped a little bit here in 2024 from 2023. These are old numbers, though. What we need to do is look at the statements. So I'm going to scroll to the statements here. And why don't we do this? Let's take a look at the, let's zoom out a little bit. There we go. So up here, you can see I can look at annual or I can look at quarterly. So let's look at the quarterly. And then I'm going to drop down to the net profit margins down here. Okay. And actually, what's interesting is it only goes back to the September 30th of 2025. It did drop down negative 15. But right now, we are actually higher than that, as I mentioned earlier, right? So the net margin loss is, what was it, negative 0.43. So it's improved since then, which is probably what's leading this move up. Okay. So there you have it for ALB, Albemarle Corporation. What else did they, if you want to find out more information about what they do, you can learn about that here. There's a little summary. Okay, they manufacture marketing of chemicals for consumer electronics, petroleum refining, utilities, packaging, construction, transportation, pharmaceuticals, a whole bunch of different things. And let me zoom up here. So another cool thing about this this website here, if I can look to see on a big day where it moved up 8.23%, for example. Let's see why that happened. If we click on the news event for that specific day, I can quickly see material sector is emerging as a surprise winner on the S&P 500 in the first trading days of 2026. Okay. All right, let's get back, folks, to analysis. So ALB, I like it. Technically looks good. Fundamentals look pretty good on it too. GLD is the next one we'll look at. That's gold. The gold ETF up 2.35%. I mean, here's a weekly chart. It's been a winner in 2025. Obviously, look at that big run, and it's continuing. As long as there are issues in the world, and there's a lot of issues right now, geopolitical issues. Guess what? This is a flight to safety. It's sort of a place where people can park their money if they are uncertain about maybe currencies like the US dollar that's been declining. Bitcoin hasn't been doing particularly great either, so gold is a nice alternative. You've got Banco Santander. Okay, this is looking pretty good here. On the daily chart, it just popped back above the Tenkan-sen, up 1.43%. Here's the weekly chart, looking still very bullish. IYM is the ticker symbol for the Dow Jones US Basic Materials Index Fund. And that one looks good on the weekly, and it looks good on the daily. It's been gapping up. Now it's a little bit extended above the moving averages. The candles are becoming smaller, as you can see there, but it's up 1.2%. I wouldn't be adding a position based at this level because it's gotten a little bit too far away, but I like the chart overall. Here's XLK, which is finally breaking through this little triangle pattern, this symmetrical triangle pattern that I had drawn. Now here's the deal, though, right? It's still only 2:15 p.m. We won't know exactly what that looks like until 4 p.m. Right now, it's looking pretty bullish. If we look at this on a 5-minute chart, for example, there's the triangle. You can see that it's been sustained since 12:55 p.m. today. It's staying above that triangle. Will it stay above by the end of the day? That's a good. We will have to wait to find out. But right now, it's looking pretty bullish. I like what I'm seeing overall. Okay. Let's go to IJR. Whoops. This one is the small cap 600 index fund. Also looking pretty bullish right now. Still above the Tenkan-sen. At least right now, it's up 0.25%. Here's a daily chart. Looking good too. And the weekly. Looking good. Gets a blue flag. RSP looks good. That's the S&P 500 equal weight ETF. Weekly chart and daily. XOM down 1.05% currently, but holding up above the Tenkan-sen, Kijun-sen, the moving averages. The chart itself still looks very bullish. I like it. And here's the weekly chart for you. Okay. Now what happened essentially is price. You can see here that was the prior high. All right, and that goes back to October 11th, 2024, and we reached that level. Okay, that happened last week on Friday, and now it's been declining a little bit. So that's what you have to, what we need to break through, in my opinion, for a continuation. We need evidence. This is more of an evidence-based approach here that we're looking for. We want to see price breaking through those levels. It's a significant level because it's a weekly level. Weekly levels, when broken, have a lot more potential than daily. KBE. Here's another one that's a weekly. I'm sorry, this is a daily chart that you're looking at, but this is a weekly resistance level, and you can see the S&P 500. I'm sorry, the S&P Bank ETF has dropped. It was unsuccessful in staying above the 63.74 level, that weekly level, from that high from 2024 November 29th, 2024. There's the high there. It was unsuccessful in getting above it and closing above it. It got above it briefly. That's what that wick represents right there. But it was not a sustained or close above last week. And so this is a weekly chart you're looking at, and this is not a good sign that it gapped down. Of course, that has a little bit to do with those 10%, that 10%, call by Donald Trump on the banks for interest rates, where they're going to be, they won't be able to increase their interest rates beyond that. Now, I don't know if that's even going to go into effect or not, but just the call on it. And you'll see some of these other stocks that it dropped in a few moments, and I'll go a little bit more into it. Here's Intel, down actually 2.79%. It looked good yesterday. It got above these levels, but it's pulled back a little bit, 2.83. Here's a weekly chart. It's still inside the cloud on the, I'm sorry, that's a monthly chart. Here's the weekly. On the weekly, it looks very bullish. On the daily, it looks very bullish too, but it's dropped a little bit. Okay, now the rest of these folks, there's something off. Even Alibaba, which is up 10.84%, which leads me to not give it a blue flag, and that's the fact that on the daily chart, it's still inside the cloud. Now, the good news is it gapped up. It started moving to the cloud. That's a good sign. It's gotten above the moving averages here. It's above the 200-day. But we still have a bearish cloud, and that's, of course, when you see the Senkou Span A under the Senkou Span B. That's a bearish cloud right there. This here is a bullish cloud. Senkou Span A, the light-colored blue line, is above the purple line. There's the crossover, the negative crossover. There was the negative crossover of the faster moving average under the slower moving average. That's also bearish. And right now, as we speak, it looks like they're going to converge. You can see that the green line and the red line are at the same level currently. And so if there's a continued move to the upside tomorrow, and it breaks through the cloud, it's going to look very bullish. Here's the weekly chart. On the weekly chart, it looks very bullish, right? You can see what happened here for multiple, because we're looking at weekly candles here. See that little trend line? That was broken this week. So I think we're going to see a sustained move up now. It happened back here, and you saw that big move. I think we're going to see it again and another leg up. All right. Happened over here. It's just listen, charts just repeat themselves over and over again. You just need to be on the right side of the trade, which is usually when you're above the clouds. Okay. That's why I use this indicator. When you're under, you're at a disadvantage, in my opinion. So right now things are looking good for Alibaba. All right, let's keep going. WDAY is the ticker symbol for workday. That's under the cloud on the weekly chart. I would skip this one altogether. I wouldn't consider it. Snowflake is under the moving averages. It's pulled back, but right now is not the right time to get back in. RH is under the cloud, so no on that one, even though it is stalling and it looks like it might be creating a little bit of a double bottom right here. You know, and the directional movement index is looking more bullish, but it's still under the cloud. It's still under the 200. I'd stay out of that one for now. CRM is under the cloud. That's Salesforce. I'd stay out of that one. McDonald's under the 2 moving averages currently, but it could certainly pop here on the weekly, maybe even this week. You never know. I mean, it's really close to the 9 period on the weekly. Here's a daily chart. Yeah, I would probably hold off on McDonald's. You can see the cloud turned bearish right here. We also had a negative crossover right there, so stay out of McDonald's for the time being. NTRA, you don't want to be buying into weakness. I mean, it's just silly to do that. You wait for strength, folks. Natera Inc. also pulling back here under the moving averages. I'd stay out of this one. All right. There's the daily chart. There's the weekly chart. The weekly chart is still holding up above the moving averages. So, and it's right under this 246.90 level. So that's what it needs to break through, in my opinion, before it makes sense to me. UNH on the weekly chart is under the cloud. That's United Health. Stay out of that one too. Even though it's showing some strength, you can see that we had a positive crossover here where the 9 period crossed above the 26, but it's still under the cloud. It's still under the declining 200-day moving average. You've got MasterCard Incorporated. We had a negative crossover here. Okay, it is technically above both moving averages, but on the weekly chart, it's not perfect yet. Here's the daily chart for you. It's currently under the Tenkan-sen as well. But stalled, look at this. And by the way, the cloud many times acts as a level of support. Price sometimes comes right down to the exact level of where the cloud is. Why is that? Because there are many financial institutions that use this indicator in particular for their decision-making process, the technical analysts. Why? Because it's been around for a long time. Do some research about Ichimoku, the Ichimoku indicator. It was published in the late 1960s, brought here to the United States in the 80s, and it's been adopted by many financial institutions, and I've been using it for many years now. I really prefer this over pretty much any other indicator out there. Now, I do also use the directional movement index that you see here. I like this one a lot too, but this is more of a secondary sort of confirmation tool for me. So I look to see what that looks like. If I see the negative DI 9, I have it at a setting of 9, okay, which is a little faster than the traditional setting. If I see the red line is above the green line, I won't consider, I usually won't add a position, okay? I want that green line above. Right here, you can see that crossover that took place there. I want that ADX to be moving up like it was right there. The white line, the ADX 9, it represents momentum. So if I show you this part, so that right here would be an optimal place, right? So if I go straight up, you can see how it gave us a nice buy. So even though it was under the cloud, boom, look at that move up, okay? When the red line is above the green line, like over here, and the ADX is moving up, that means the momentum is increasing, but instead of being a positive situation, it's actually a negative one. Do you see what happened there? Okay. So technical analysis can really help keep you on the right side. And that's the key thing here. And it's not going to be perfect. You're not going to get perfection out of anything out here in the stock market, folks. But it's the closest thing that can help, keep you on the right side, at least of the trade. And you can determine what time frame you want to trade. Maybe some people don't want to do this on a day-by-day basis, so you just use the weekly chart instead. Look at the charts on the weekly. And if you like the software that I'm using, it's called TC2000. I strongly recommend that you make the investment in trying this out. You can try it for free for a month. What you do is you go to my channel here, Blue Cloud Trading, the YouTube homepage, and click on this right here next to this link, the TikTok link that I just added. Add 9 more links. You click that, you scroll down, okay, and there's the link for the software. You get a $25 coupon with this affiliate link, tc2000.com/download/Blue Cloud Trading. Click on that. It will bring you to this page, the TC2000 page. You add your email here. You can download the software, and you say yes, I would like to receive email related to TC2000 products. You will receive a $25 coupon towards your TC2000 service, courtesy of Blue Cloud Trading. As long as you haven't used the service in the last 12 months, you get that $25 coupon. Here's the pricing. So you click on that, software plans and data. You select monthly. And there's the basic for $24.99. So that's what I'm talking about. You can try this at least for free for a month. I strongly recommend the premium because there's a lot more features here with the premium. You get all these other premium features like real-time scanning, most watched and trending stocks, morning pre-buzz, that's a good one. Chart drawing tools, easy scan wizard. You can track up to 100 alerts. It's great. I personally do use the Premium Plus, but I'm a very active trader, so I get more bonuses here. I can track up to 1,000 stocks, so I can create 1,000 alerts under this service here. Anyway, and by the way, if you want to reduce the monthly costs on these, what you do is you can either do annual. You can see how it changed the price there. Or if you want to pay for it once every 2 years, you go biannual. Look at the prices. It dropped significantly. All right. For the premium, it drops it from $49.99 to $37.49 a month. So that's pretty cool. All right. And by the way, TC2000 also has a brokerage service. You can trade right off the charts. Okay. You can slide around the chart and add your limit and stop orders, attach orders to trend lines. That's a cool feature right there. The fact that you can actually draw a trend line and then right click and place an order on the trend line. Okay. So if price touches the trend line, it actually goes into effect. All right. And by the way, they also basically they work with interactive brokers. So all of the execution goes through interactive brokers. So which has been around for many, many years. Okay, let's get into it. So what else are we going to look at here? We're going to look at REGN, Regeneron Farm. And on the weekly chart, it's inside the cloud. Yes, it's been showing some strength here, but it's still inside the cloud. I'd hold off on that one. It was down 3% today so far. AXP, American Express, dropped. I did make a little note here. So one other cool thing you can do is hit the plus sign here, and you can, sorry, that's the wrong one. There's another one up here. You click new, you can create a note, all right? And if we right click this, I can view this note. And basically I wrote this note down because just to share with you why it dropped so much. Trump's proposed 10% cap on credit card interest rates sparked the pre-market decline for financial stocks, including AXP. That's what led to this drop here that you see. Here's the daily chart. You can see how it gapped down. Found some support here on the cloud. So that's what happened there. Capital One Financial, same situation. Okay, it's a financial stock. It was hit the same way. Tumbles after President Trump calls for a 1-year 10% cap on credit card interest rates, heightening regulatory risks concerning for card issuers. The bank also agrees to pay $425 million to settle a 360 savings account interest rate case. What else dropped today? SYF, ticker symbol is Synchrony Financial. Let's look at that note. Also, right? Shares fall after President Trump proposes a 1-year 10% cap, while the company expands credit care credit integration with Fiserv's Clover platform to enable end-to-end patient financing for over 40,000 health and wellness providers. But that's a big drop, 9.17%. And yeah, so that's what we have for those stocks. We just went over 24 stocks, and you can see how you don't really need to spend too much time when you're using this indicator. You'll have an idea. You can quickly just skip the garbage and get into the good ones. I mean, they're not all garbage, but you know what I'm saying. Tesla, currently under the moving average, under the Kijinsen, we had a negative crossover here. It is bouncing off the cloud, up 1.54%. It could turn into something, but right now it's stay out of this one. It found resistance at that monthly level of 488.54 and dropped. Okay, again, looking at a monthly chart based on that prior shooting star candle from 2024. So that's where we're at with Tesla. On the weekly chart, Tesla is currently above the Tengen-sen Kijinsen, and it does look bullish. Okay, it looks like it's finding some support at that Tengen-sen, but on the daily chart, like I said, it's not perfect yet, so I'd hold off. Apple under the cloud, still showing a little bit of strength these last 3 days. On the weekly chart, it's under the Tengen-sen still, so I'd hold off on that one. Meta is under the Kijinsen. Tengen-sen is under Kijinsen. That's also negative. I'd stay out of that one. That's the weekly. There's the daily, still under that 200-day moving average. Microsoft under the cloud still. Nothing happening. I've been talking about these stocks for like how long, right? For forever. And just saying, guys, just wait it out because you're just tying your money up. Don't tie your money up in something that's consolidating for an extended period of time. Why? Because it can, it could also just break down further. It could certainly, if it gets under these lows here, price could drop more. So just keep that in mind. We have a negative cloud here with Microsoft. All right. And then we got Amazon, which does show strength. I like Amazon a lot more and more. You can see here for multiple days now, we've been continuing to move up. I've been talking about that. The only negative here that I see is the cloud itself is not quite there. You get the single span A still under single span B, but it is moving up. And I think it's going to cross soon. The directional movement index is giving us a buy signal. It actually gave us a buy signal back over here. So we just didn't have confirmation on the rest. And on the weekly chart, what does Amazon look like? It looks good, but again, not all the elements of Ichimoku. They're not perfect, right? Tengen-sen here is under the Kijinsen still. That's why Amazon doesn't get a blue flag yet. So overall, I like where it's heading. Even the ADX here, the directional movement index looks good, but right now I hold off on Amazon still because I like perfection. At least when it comes to entering the stock, I do want all the elements of Ichimoku to give me the same story on both the weekly and the daily time frame. It's up to you guys to determine what time frame you want to trade, though. So if you're more of a short-term trader and you use the daily time frame, and maybe you use the 2-hour time frame, you can see everything looks really good here on the 2-hour, right? You can get in a little bit earlier, but you do have to maintain and watch it every couple of hours. And I don't have time to look at the stock every 2 hours necessarily, and I don't want to. So I focus mostly on the weekly and daily time frames. All right, now we're also going to look at one of our members' requests, GLSI. Let's look at the weekly chart first. We'll start off with a weekly, and you can see that the cloud itself is interesting because there's almost like the cloud itself is at the same level, the single span A and single span B. If we were to, hold on one second. Yeah, we don't have enough data, it looks like. Let me see. No, we do. It's just that the cloud itself hasn't started to form yet, and that's because it went parabolic here. That's why you see that just the single span A and single span B at the same level and like a line. It's because you can see that price broke above the cloud here on December 26, 2025, that's the weekly candle there. The opening price was around $13.43, and it moved up in 1 week up to $20.56. So it had a big jump, like about a 54% move, okay? And it's now continued. So since it broke the cloud, it's up 98%. That's a big move. It's a very volatile stock. A lot of biotech stocks are. Whoops. Okay, we're back on. I had the TC2000 on another laptop as well, so it kind of got confused, I suppose. Okay, so GLSI, it's moved up a lot, but it is a very high beta, 2.23. Expect this to like move, significantly each day. Here's the daily chart, and it's currently above the cloud. This is where you can see, here's a perfect example of how it can give you some insights about proper time to get in. If you want to be trading something as volatile as this, everyone has a different risk tolerance level. Okay, right there, where it got above the cloud. Since that point, it's moved up 135.74%. Now, it did close under the moving averages briefly, but found support right there at the 200, stayed above that 200, and look at that move up. And now it's still looking very bullish. So that's what we have here for GLSI. Technically, I like it on the weekly. I like it on the daily time frame as well. You can switch it down to a 2-hour time frame. Even that looks good right now, currently, as the market's still moving. It's 2:37 p.m. And we can switch it to a 1 hour. The 1 hour looks good. Bullish cloud, prices above the moving averages. You can switch it to a 30-minute. Same situation here. Now each one of these bars is 30 minutes long, right? 10 minutes. Okay, there you have it. It looks like it's going to find some resistance on the 10-minute chart somewhere around this level here. Okay. Then you got the 5-minute and 3-minute, all the way down to 1 minute. And by the way, that's another really cool thing. So if you're into day trading, the 1 minute time frame, you can trade that. Now, if it's not a very liquid stock, and what I mean by that is there's not a lot of shares traded per day, like in this case. All right. One of the dangers is you're going to have a wide spread of the bid and asking. There's the bid price and there's the asking price. Okay. And that's a big wide spread right there. In fact, if I was to measure it, it looks like it's about, what is that? That alone is about a 0.85% spread. Whereas if you're trading something like Tesla, on the other hand, which is a very, let's see here. See how the bid and ask price are very close, 451.21 and 451.24. All right. That's because on the 1 minute time frame, you got 70,000 trades happening. Again, you go to GLSI, you only have about on a 1 minute time frame, you only have about 700 shares traded, and you can see the candles don't really even form perfectly here because it's an illiquid stock. If you look at the daily chart, there's only about 216,000 shares traded per day on average, right there. Okay, whereas with Tesla, for example, 46.6 million per day. And that's why the candles are more easy to distinguish. And so you have to be careful with these low volume type stocks. Yes, they can be lucrative, but you can also get sideswiped and hit pretty hard in the wallet if price drops. Like, for example, over here, you can see that high of 29.90, and then it dropped all the way down to this Tenkan, which was a 30% drop in 1 day. So this is more of a day trading type stock, I would say, but I would probably use a 3-minute chart because then you get the candles at least make a little bit more sense here. So like you see here, it broke above the Tenkan and Kijun. All right, and there's a 2.2% move here from 2:12 p.m. until right now, 2:39. So you can see how the technicals work on any time frame that you choose. So with that, that's the last stock we're going to analyze today. Guys, I do appreciate you guys for supporting this channel. And if you don't want to become a member, that's okay, but maybe consider just hitting the the subscribe button here, because that is free. Hit the subscribe button. Another way you can support the channel is by sharing this video with someone as well. So once you become a member, there'll be a new tab that pops up here if you were to join, and it will look like this. You'll see the membership right there, and that's how you'll be able to access the member-only videos, and you'll have access to all the older videos too, right? So these videos, it's just me and the charts, and there's nothing else except for me talking about all the trades that I place throughout the week, why I place the trades, and then I give a lot of new ideas for the upcoming week, each weekend. So thanks for watching. I will catch you all in the next one.